Hello and welcome to this edition of the Monday, February 9th Bourdieu Report. The week was rich in statistics and indicators. The one that caught our attention concerns the US labor market. You can see here that the number of job openings has fallen to 6.5 million. This is the lowest level since September 2020. This tends to confirm the weakness of the job market, for which we will have the January monthly report, delayed by the early year shutdown this Wednesday. We will be watching this closely because if this weakness persists, Kevin Warsh, the future head of the Federal Reserve, will have a strong argument to meet Donald Trump's requests to lower interest rates. But the stock markets, in any case, were driven by something else last week. You can see here that the US stock market slipped slightly, down 0.1%, and it clearly underperformed European markets and Switzerland in particular. The US market was dragged down by the technology sector. The Nasdaq, not shown here, is now actually in slightly negative territory since the beginning of the year. So for what reasons? There are two. First, there were announcements of sharply increased investments by Google, Alphabet, and Amazon. This was received fairly well on Google's side, but much less so for Amazon. With $200 billion in investments on its own, the retail giant will no longer generate cash flow after investment. And that is starting to make investors nervous. The second reason is the announcement of new features for artificial intelligence tools, notably Claude at Anthropic, which will have effects on the software value chain and may even call into question the business model of certain software players. This sector, already losing momentum lately, was heavily sold off and is showing a drop of around 15% over the week, but the market acted indiscriminately. While no one can deny the risk of value loss for certain players in the sector, not all software publishers and related platforms are exposed in the same way. Broadly speaking, there will be those operating on software layers that could become obsolete, and those who own the data and/or have very strong barriers to entry, who will use artificial intelligence to accelerate their processes and development. This is why we have, for our part, increased our positions in Microsoft, SAP, and Cadence Design, which is less well known to the general public, but is a key player in chip design software, serving precisely the artificial intelligence industry. Well, that brings us to the end of our session for today. We really appreciate you taking the time to listen, and we look forward to seeing you again next week.